In today's video, we are going to be analyzing the Omaha, Nebraska rental market for multifamily properties. As we can see, this little small market here, which is a little bigger than it looks, which is right next to Lincoln, Nebraska, you can see that the MSA is drawn out by CoStar, and I've got it zoomed out so you can kind of get an idea where it is. Not a lot of people are familiar with Nebraska or where it might be located, especially Omaha. So you can see we have Des Moines, Iowa, Cedar Rapids, Iowa. We've got Kansas City, Missouri. We got St. Louis, Missouri over here. And of course, we've got Kansas over in this area, and South Dakota is up here. So this kind of gives you an idea of where this market is in the central part of the United States, or what we call the Midwest. So let's take a look at the filters, and you'll see that, as usual, we are excluding all corporate, all military, all senior, and all vacation. And we are only including market and market affordable, so that we're just looking at conventional apartments. We are currently doing all Class A, B, and C markets. We don't look at the Class F. And when we drill down, we will look at the A's individually, the B's individually, and the C's individually. Although you guys don't see me change these classes when I go from class to class, this is where I'm selecting that criteria. If we go to location, you can see that we are in market, metro statistical area, Omaha, Nebraska. So let's see what the analytics are telling us for this rental market. Here is our supply snapshot for Omaha, Nebraska. You can see that we have 1,521 properties, totaling 79,693 units. There are still 4,571 units under construction, and it does look like that absorption is slowing, yet still positive for 2022 for 1,106 positive units of absorption, where the previous year in 2021, you had 2,701 units that were absorbed during that year. We have gone a very slight increase in vacancy rate from 4.9 to 5.5, so a pretty low vacancy market. And you can see that we have an increase in rents year over year, so we will see what it looks like quarter over quarter. If we scroll down and look at our long-term occupancy average over the last 22 years, Omaha, Nebraska likes their market at around 92.75%. And we're currently sitting at 94.53. So with a slowing in absorption and increase in vacancy, it does look like that we are above the long-term occupancy average line. So once again, probably in the oversupply phase, but from the looks of this, maybe around the middle point of that market cycle chart. But we'll have to look at our data and see what the data tells us for all asset classes A, B, and C combined. So let's go look at the data. So here is the rent analytic data for the Omaha, Nebraska metro statistical area. We do not look at asking rents. We don't care what the owners and managers ask. We want to know what they are collecting, so we only look at effective rent. In the first quarter, they collected $10.39, went up to $10.75. Second quarter, up to $10.79. Third quarter, up to $10.85. Fourth quarter. So interesting that we have increase in rents in every quarter. This is the first time we've seen this. We have not seen in the overall market, including Miami and including Milwaukee, we did not see growth in all four quarters. So very interesting tale here. Let's see what our deliveries and absorption tells us. So when we look, we see that we had 269 deliveries in the first quarter, 774 absorbed. So 3 times absorbed what delivered. 821 delivered, and then we had a major slowing in absorption. So that means we probably had a tick down in occupancy, and we did. Then we delivered 507, absorbed 303. Not too bad. Would have liked to have seen it a little stronger. 168 delivered, 118 absorbed. That one's pretty good. So we are seeing some strong absorption in the market. The deliveries are more than the absorption. So we do have that slight tick down from 95.5 to 94.5, albeit a very slow tick down. So because that long-term occupancy average is around 92.75%, that does not surprise me that the rents have not trended downward yet. Let's go see what the Class A space is telling us. I like what we're seeing so far in Omaha, Nebraska overall. So let's see what Class A's tell us. So here is our Class A rent analytic data. There are 48 properties totaling 8,262 units. We're looking at effective rent. And we started first quarter 2022 at 1302, went up to 1345, up to 1360, and up to 1372. So trending upward continuously in the Class A market. Let's see what deliveries and absorption tells us. So we had 0 deliveries in the first quarter, 135 absorbed, so nice and strong there. 171 delivered second quarter, 142 absorbed, still strong, albeit not as much. Then another single apartment absorbed with no deliveries, and -6. So even though it shows some sign of weakness here, it's not too terribly bad because we had some strong absorption in the first quarter and second quarter. I'm not too concerned about this. It does show why we did get that 1% downtrend. So the Class A properties are showing some weakness here, but not too much to be concerned about because that occupancy is still really strong, which explains why the rents are still increasing. Let's see what the Bs have to say. So here is our Class B rental market. There are 274 properties totaling 27,560 units. Once again, we look at effective rent. Started first quarter 2022 at 1144, went up to 1190, and a little slight tick down to 1188 between second and third quarter, but then back up to 1193. So a little interesting wibble wobble in the Bs. Let's see what the deliveries and absorption tell us. So we can see that the majority of the deliveries, as was with Grand Rapids and Indianapolis this week, it's still holding that the Class Bs are delivering the most units in the upper Midwest. 269 delivered in the first quarter and 639 absorbed, so almost 3 times, about 2.5 times absorbed over deliveries. You can get some negative absorption, and that will kind of catch up a little bit. 532 delivered, -4 absorption, 507 delivered, 431 absorbed. So interesting that we had this negative in the second quarter. My guess, probably some split between first and second quarter. CoStar may have not caught up with it, but when we look at this, you're looking at 1,070 units, and you're looking at, about 1,300. So staying around that 75 to 80% tile, which shows a nice stable market. Then 168 delivered in the fourth quarter and 214 absorbed, so more absorbed than delivered. So we're pretty close to equal here. We're definitely around 75, 80% absorption to deliveries for the year, which is why our rents are continuing to trend in a positive direction. Our occupancy did increase from first quarter to fourth quarter. So that's a little interesting considering we were slightly under in absorption than deliveries. So that's an interesting tale, but again, could be just some catch up in the data. Small numbers like this, it's not really that big of a deal. All right. So, sorry. I thought that was a 92.2. It's 94.2. Little quick catch there. And that's because we had that 2.5 time absorption. So if we go back and look at fourth quarter, it was 92.8, and now we're at 92.4. That makes a lot more sense. All right, good. Glad we caught that. All right, so that part where I screwed up will not get edited out. You guys will see my little screw up because we caught it, and that is the explanation as to why we are a little bit down and not a little bit up, which did not make sense. So this Class B market is reacting appropriately to its absorption from its deliveries, and the rents are also, we saw that little tick down right here. Remember that. It is reacting appropriately. So demand supply is doing what it's supposed to do. Let's see what the Class C space is doing. Here is our Class C rent analytic data. You can see we have 1,140 properties totaling 43,301 units. Looking at effective rent, we started first quarter 2022 at $890, went up to $918, up to $925, and up to $931. So we have seen this uptrend in the Class C space across a lot of markets, but we have also seen this uptrend in the Class A, the overall, with a slight tick down and back up again in the B space. So this is not surprising. Let's take a look at what our absorption tell us, because we should not see deliveries. Again, ignore the deliveries and under construction because you do not deliver to the Class C market. Interesting that we're seeing negative absorption with those uptrends. So something a little different. But if we look, we got 96.2% occupancy and we only go down to 95.6. So this market is not quite at that long-term occupancy average. Remember, it was like 94.75. So we're still working our way to that long-term occupancy average. So even though we've had some slight downtrend in absorption, not too worried about where the rents are on an increasing basis, especially since the rest of the market is holding strong and doing the same thing. So overall, for the Omaha, Nebraska market, I would put it in the oversupply phase, probably in between the long-term occupancy average and about midway from the equilibrium to the long-term occupancy average. Very, very, very slight downtrend for the second market in a row. We've seen more of a downtrend with absorption in Class C than we have in the other two asset classes. That's been a bit of an anomaly from the Sun Belt, but it looks like the upper Midwest, that seems to be what we're seeing on a pretty consistent basis. So regionally, we see some trends happening throughout these videos. So that concludes Omaha, Nebraska. And tomorrow, stay tuned for Rapid City, South Dakota, staying in the upper Midwest. I will see you guys tomorrow.